Hello, I'm Debbie Bell Hosking for Finextra TV here at Cybos in London. I'm talking to Tim Tyler of Finastra and Tom Zink of IDC, and we're chatting about corporate treasury. Hello, gentlemen.
Hello, Debbie.
Right, I'm going to go to you, Tom, first of all. You've been working with Finastra on a survey looking at 400 global corporate treasurers. Can you please identify some of the current trends that came out of that survey?
Happy to. So what we tried to do when we set out with this survey is not just to understand what are the priorities of those treasuries. What we really wanted to get down to is what are they really working on within those priorities, and then more importantly, what are the value-added services or the data services that they were looking for from their banks. And I think even more importantly, are they actually willing to pay for that? Because we really wanted to get a good feeling, or give our banking customers a feeling for what is the opportunity for them and how should they transform and how should they move forward. So when we started off in the priorities, it was quite interesting actually that in today's environment, access to funding was by far the most outstanding priority for them. And that really spanned anything from reworking that very complex KYC process that banks are offering today. Also, very strict policies, very strict documentation that you have to go through. But also, increasingly coming up on the radar is access to alternative sources of funding, and also access to alternative trading sites, bond trading, and so on. Some of the other priorities today are really around risk management, so particularly managing counterparty risk, getting better at using advanced analytics to really get more actionable insights on behalf and automate a lot more of the things that happen in an organization. And the third priority area today was around productivity and usability, so really empowering your staff to do more with what you have. And that really went down the direction of getting more proactive alerts, getting more proactive insights, getting more notifications. Also, mobile enablement, surprisingly. I mean, it's 2020 and still we're talking about mobile enablement. It's still a big priority for a lot of the corporates out there. We also asked how this is going to change in the next 3 years. And what we found was that we see a really diversification of priorities. So while today funding came above all others, moving forward, access to real-time data, access to real-time payments really is jumping on top of the list. Another one that's joining that priority list is around liquidity management. So you really see how the priorities are diversifying, and open banking and real-time payments and real-time data really transforming the way treasurers are thinking about their business.
So you're talking about the shift of priorities for treasurers, and I'm going to go to you, Tim, but what do banks need to do to stay relevant and future-proof?
I think, off the back of some of the data that's come out, which has validated the thinking that we'd already been going down, with a few surprises in there as well. But I think banks have got to decide whether they want to be one of three principal directions they want to go in. Firstly, do they want to be a product provider? Effectively a transactional-based bank, as a lot of them are today. Do they want to remain in that basis? Or do they want to evolve and become a relationship builder? And for me, relationship building is very key nowadays. The age of digitalization and front to back and self-service, it becomes ever more important that banks build and nurture those relationships with their clients. The third angle is whether they become a platform player. And we don't mean platform in the sense we might from a technology perspective, although technology is a very key enabler to allow them to do that, but actually offering X as a service. So whether it's Treasury as a service to the corporates, whether it's receivables as a service, and you could go on. Those banks are looking at leveraging their back office capabilities and their economies of scale to actually deliver those services out to their corporates. So I think the banks have got to make a fundamental choice as to which direction they go, build their own roadmap out to how they achieve that, and then work with vendors such as ourselves at Finastra to put those stepping stones and key technological blocks in place to enable them to get there.
Just to add to that, so what we really see, basically this movement is coming from two directions. So first one, customers are asking for it. So, I mean, banks have been very good at providing the products that they have, but they need to get better at engaging their customers. I think that is the first role that you were talking about.
Yeah.
But where it's really getting interesting is around building that relationship model. So you're moving away from pushing products and transactions, but really moving more into the role of becoming advisor to the Treasury. And on the back of that, obviously changing your entire revenue model around it. I mean, obviously there's some difficult adjustments that go with that. Basically need to really come up with new revenue models. You kind of need to, well, commit to the success of your customer rather than charging them on transactions. So really fundamental drivers and changes that have to happen for a bank to go through that. But as well, margins compression is going to intensify further, and it's really going to be about economies of scale. And the big players, they will still run a very successful transaction business. But for smaller players, I think they have to really come up with a unique differentiator, and that could really be, I'm providing the best advice in the market to my customers, and I really help them to achieve the outcomes that they go after, or really help them achieve, well, feasible business outcomes that they have planned on their roadmap.
I'm a big believer, Tom, that we need to enter a new age of relationship banking. And I think that's where a lot of banks will have to go to be able to compete with those platform players above them.
And you're talking about relationship banking. If we are to talk about technology, what technology can banks look at to support them?
Well, what the survey showed actually is by 2022, the number one priority that corporate treasurers are looking at is access to real-time data and real-time payments. If we flip that onto the bank side, it's, data is king. We've got digital data islands scattered about the landscape within the banks, and we need to be able to properly bring that all together and run some of the analytics, Tom, you mentioned behind it, to be able to better inform the relationship managers within the bank, as well as exposing that out to the corporate. So, those data services are going to play a ever-increasing role in what the bank is doing, both for their client benefit and also for the bank to leverage as well in those conversations.
I mean, I think for you, Tom, what are those first steps for banks? And ultimately, what, in your opinion, will adoption look like?
Yeah. Let's take stock first where they are, and I think that was also something that came very clearly out of the survey. So banks are the most trusted partners in the ecosystem, and they're also the partner that a lot of treasuries are really turning to help them really go through this transformation that is happening in the market. So, I mean, banks are still in a very unique position, and I think, well, the only thing that they must not do is obviously become stagnant and try to conserve that. And I think when you go around the conference here, there's a lot of activity now happening with fintechs, and a lot of that is very, very collaborative. And I think that's a great way for banks to really drive innovation and become more customer-centric. What also really stands out for me this time is that you have, for instance, a Starling Bank exhibiting here.
Well, gentlemen, thank you. That's a lot to consider. It's been a great conversation.
Thank you.
Thank you both.
Cheers.
Thanks.